Joe, Gateway manages options-based, low-volatility investment strategies. Is this a good market for those type of strategies?
We would say so. Just like you said, Gateway manages, what we try to achieve with low volatility equity strategies is smoothing out the ride, if you will, of owning equities. At Gateway, we're long-term believers in the U.S. economy and global economies, but we also know and understand that investors, in order to stay invested and achieve capital appreciation, are going to have to stomach those ups and downs of the market and volatility.
Well, we certainly have seen a step up in the VIX as of lately. Last year, it was really stuck underneath 15. And now it looks like we're creeping above 20 even. Can you talk about how the new administration has kind of fed into this step up in volatility, the step up in the VIX?
Sure. And there's rhetoric and there's comments and then there's actual policy and changes. And there's a roller coaster, if you will, across all those different dynamics. Really, all of that helps, or I should say, plays into volatility and certainly those spikes and kind of receding tones of volatility, all of which is what Gateway tries to capture and tries to monetize, right? We are sellers of volatility. We're cash flow positive strategies. And that cash flow that goes back into our strategies really helps provide ballast if and when markets are rocky for our investors.
And what about interest rates? We really saw the 10-year tick up to almost 4.8%. Mm-hmm. Now it's coming back down closer to 4%. How is this affecting your strategy?
Sure. So when we study interest rates, if you go back long-term, 30, 40, 50 years, the long-term average of the 3-month T-bill, for example, is around 4.5%. So we're roughly in line with that right now. More than that, if you look a little bit more recently and you study coming out of COVID and we had inflation that rose very rapidly, the Fed reacted and rose rates very rapidly to that. Once we got to about the 3% level, and that was roughly October 2022, we really started to see a consistent additional benefit to strategies like Gateway manages. Again, selling volatility, trying to monetize that. And then where interest rates come in, obviously, if you look at any option pricing model, for example, there's the level of the asset, interest rates and volatility as kind of the three main components. So anything elevated or in normal levels, we would say, is very healthy for us.
Well, you've been running a hedged equity strategy for quite a long time, but there's been a whole lot of new entrants into the market, buffered ETFs and the like. How has the rise in hedged equity strategies affected what you do?
I think mostly in a positive way, almost all in a positive way, largely bringing attention to our space. We know our kind of corner of the investment universe can be small at times. During quantitative easing, when rates were as low and close to zero as we could get and volatility was very dampened, it wasn't a great time for strategies like we manage. Where we are today is significantly different. And what I would say to investors largely is you really need to know and understand what you own. Meaning in portfolios like we manage, our newest product is the Natixis Gateway Quality Income ETF. And that's an income-producing ETF that combines a high-quality portfolio of stocks, the high-quality factor basis, with a portfolio of derivatives meant to generate income. And we're targeting a yield of somewhere between 7 and 12% on that. That gets distributed on a monthly basis, 7 to 12% on an annualized basis. But really, again, trying to put together a portfolio of high-quality stocks with that yield component to allow investors some certainty and some confidence of what they're owning.
And then finally, a lot of strategists believe that valuations have been stretched, so the upside really isn't there. One would think that fares pretty well for a manager like you who's selling off the upside. Would you comment on that?
Sure. When I think about market movements or trends, if you will, there's broadly kind of 5 scenarios. A market that goes up very strong, a market that goes down strong, and then the kind of 3 in the middle that are slightly up, flat, and slightly down. We could easily make the case that we're probably going to be in an environment similar to that or have dynamics of a market like that for some time. Maybe it's the next 4 years. And markets like that are actually very strong for Gateway strategies. Largely, we're able to capture a bit more of the upside, protect on the downside, while generating really healthy cash flow for our investors.
All right. Well, thanks for coming on and talking about it.
Thanks for having me.